Hi there, and thank you for tuning in to Dukascopy TV. I'm Dura McDermott in the Geneva studio, joined by Robert Seiler, Alternative Investment Manager at Peak Partners, to discuss its Green Peak strategy. So first of all, Robert, Peak Partners developed this strategy in 2009. It has a multipolar approach.
Yeah.
And can you tell me more about it?
Sure, thanks Dara. I'm very happy to be here to talk about the Green Peak strategy. As you said, we started to develop that in 2009, and our first idea, because Peak Partners is an absolute return boutique, was to create a fund of hedge fund in the green space. But we found out pretty quickly that there were not enough managers, good managers in that space, and also that the investment vehicles that they were offering were quite small. So basically the investable universe was too restricted to launch a properly diversified fund of hedge fund in the green space. So that's why we started to introduce slowly into the equation long-only managers until we reached our eureka moment. That was back in 2010 when we basically modified a quantitative asset allocation platform that was developed over the years by one of our partners to work on the hedge fund space, to make it work on the long-only space. So it took us some new developments, some new innovations along the line, but eventually we managed to reach a very successful system that basically does, in a nutshell, does two things simultaneously. Number one, it selects the long-only managers based on the expected alpha generation. We all know that on average and over the long term, long-only managers deliver negative alpha. But we also know that from time to time, there are good ones, less good ones, but also during different periods of time, long-only managers do deliver alpha. That's exactly when you want to have them in your portfolio. So Green Peaks does that, so it selects the ones that do generate alpha at a certain period of time. And also, since we wanted to have an absolute return product, we needed to have a market timing system, right, to avoid the market drawdowns. And so we managed to do that. Again, we have a very short investment period, which is 1 week. So the system is very reactive. And by doing those two things simultaneously, you can actually manage to deliver absolute returns using only long-only managers or traditional equity funds, which have daily liquidity, and ETFs, which are exchange traded, and so all very liquid underlyings, and you can generate the performance that you can see here. This is back tested since 2006. It's real time since 2010, and over the past 12 months, for example, the strategy had outperformed net of fees its benchmark by 36%. Which is quite outstanding, and year to date the strategy is up 9.6% versus a drop in the green index, which is the blue on the bottom, which is minus 4.5% year to date. So it works extremely well.
And clean tech stocks have been performing quite strongly. However, there still remains a lot of volatility. Can you tell me more about this?
Yes, you're right. I mean, here you can see the clean tech stocks since, this is one of the oldest indices available, so you have more than 11 years. And you can say that, well, there's strong bouts of outperformance from time to time, and it can actually last quite a while, but also, especially during market downturns like in 2008, and also this year, you can have dramatic underperformance, right? So, and this is not surprising because we're talking about new technologies, and in new technologies you have innovation, new untested business models, a lot of uncertainty regarding which technologies will survive, which companies will survive in the end. So it's like the internet stocks in 12 years ago. It's like even early on the radio stocks and the automobile stocks. I mean, it's normal, right? So that's why we believe that a simple buy and hold approach, simply holding on these stocks for a long period, it will not work, and will test your patience as an investor. So that's why we've developed the Green Peak strategy, and we believe it's the only reasonable way actually to invest in this space.
And over the years, the performance of water stocks has been outstanding. Can you tell me why this is?
Yeah, actually, it's quite amazing to discover that many investors are not aware of this outperformance, which you can see here. But it's truly outstanding. Well, first, water stocks are considered as defensive stocks. You have, but not only, but you have water utility stocks in there, which typically pay high dividends, and they are not cyclical stocks. Also, during that period, you had 2 bear markets. You had difficult times for equities. So this is one of the reasons. Just when you look at this, you see that basically the MSCI World has lost money over 12 years, which is quite a long time, whereas you have water stocks that have gained more than 140%. So it's quite outstanding. But the defensive characteristics of water stocks do not only explain this. It's also because the fundamentals have been very, very strong. You have, well, clear water is a limited supply. We don't create more. We can destroy water, but we can't create more, and there's no substitute, right? And actually, clean water that we can use is less than 1% of all the water available on this planet, right? So you have a limited supply and you have growing demand. Why? Because you have a growing economy, you have populations, especially in emerging countries, who want to have higher living standards. So they consume more water. They also want to eat better food, and so agriculture, which is the main contributor to water usage, is also increasing its demand. So basically, demand for fresh water is growing at twice the pace of the global economy. That's one big supporting factor. You also have the fact that in developed countries, and here especially in the US, but also in some parts of Europe, you have a crumbling water infrastructure system. It's very, very old. In New York City, you still have pipes in wood, which is crazy, right? And we're talking here about hundreds of billions of dollars of new infrastructure to be built in developed countries only over the next 5 to 10 years. And finally, you also have climate change, which is a big contributor because the water table is dropping in many countries. There's some countries that become more arid. As we speak, the US, for example, 40% of the US is in drought conditions, which is unprecedented. So there are many factors that are driving demand for water stocks, and we believe this is going to continue.
And finally, Robert, is Green Peaks an SRI product?
Well, there's been a lot of confusion about what was an SRI, which stands for Sustainable and Responsible Investing product. The good news is that Eurosif has come up with a set of very clear definitions. So according to those definitions, Green Peaks, which invests in thematic funds on renewable energy, energy efficiency, and water, are definitely included in the SRI thematic.
Thank you very much, Robert.
You're welcome, Duran.
And thank you for tuning in to Dukascopy TV. I'll be back later with Guillaume Taylor from Qualia to discuss impact investing. But for now, goodbye.